What's up, team? All right, guys. All right, team. Today we have Apple earnings. Let me know if you think Apple's a buy. Let me get the stream going here. We also have Coinbase earnings today as well. Let me get the scrollers at the bottom here. So y'all can hear the music, correct? You should be able to. All right, so we get at all right, so remember, Apple drops their numbers at 4. It might be 4:30, but again, market is, if we look at the SPY here today, market's very sideways and choppy. I mean, we're down slightly, gapping down, but market is very sideways and neutral so far. Yeah, Apple, Shopify, Coinbase, Carvana, Lyft, DraftKings, all today. Yeah, big numbers today. We got a lot of stuff to cover here, to be honest. We're going to do a poll, and then we're going to do a Twitter poll as well. Carvana, Lyft, Draft. Does Apple earnings beat, miss, or come in as expected? Beat, miss, as expected is going to be the options on the poll. So we're going to do a Twitter poll. So this is Q2 earnings today, remember. All right, so yeah. I'm going to put this link up here. Do me a favor, hit the like button as well. Bump that number up. Vote on the poll. Let me know what you guys think. We got the poll going live as well. Apple breaking support. Yeah, you can see Apple break it down under the volume weighted average price in the 200 EMA right here. So we do have that level to watch. We will put the expectational numbers up. To the Jasmine one. Yeah. Okay. Why didn't you just use the Keurig? Okay. All right, I appreciate it. Love you. Thank you. Anyways, Apple break it down. Not a huge amount, but it is dropping a little bit. Gold is sideways, but we are green on our gold trade from this morning. We bought a little bit of gold. What was I doing, man? What was I getting ready to do? Oh, yeah, the expectational numbers here. So, again, Apple is expected to show 147 EPS for Apple. 147 EPS. 144 estimates, actually. So, Apple... 144 on 92.94 billion in revenue. These numbers come out at 4:30 is when they're scheduled to come out, believe it or not. Hopefully the earnings call is at 5, so it's not like super lagged on. That'll give us some time, like, honestly, for some other stuff. We're going to put this up on the screen. Again, let me know if you think they're going to beat or miss here. Strangle, good luck, man. No timer. Timer's coming out. We'll start the timer in about 15 minutes or so. Because, again, Aapl is scheduled to come out right at 4:30. Yeah, for sure. Hey, all good, Tiny. No worries. You're here right now. That's all that matters, you know. Yeah, so the specific time they're supposed to drop their earnings is 4:30. Let me see when the earnings call is supposed to be. So yeah, the earnings call is at 5. The actual earnings are supposed to drop at 4:30. So that works fine. Vote on our polls here. Again, about 63% are bullish on Twitter, 38% are bearish. On YouTube, we're pretty split down the middle here. 49% think they're going to beat, 32% think they're going to miss, and 18% of people think they're going to come in at expected numbers. And if we look at Aapl right now, it is falling down a little bit so far, down under the VWAP here, under the volume weighted average price. Speaking of gold, do you find it a waste of money to buy physical gold and silver? It is the extra insurance worth the premium. It depends on what you're buying it for, I guess. Some people like tangible things. And so it depends on why you're buying it is the big thing, right? I think the way I would look at it is if you're buying a lot of gold, you know, I'm going to buy a lot of physical gold. If it's just if I'm just kind of diversifying, then there's no reason you shouldn't buy just a gold ETF or like a futures gold futures contract or whatever you want it to be. But again, it depends on how long you're supposed to hold it. Yeah, for sure. Meat world, 100%. Taking you on a walk. Hey, all good. All right. So, Aapl earnings. Honestly, I'm going to get some much needed rest after today, man. I have just been so packed. It's just been so busy, man. It's really been one of the busiest quarters we've had all year just because of everything going on. All the different stuff that we're doing. Stream is growing like crazy, if you look at how much we've been working here on this channel, it's been a lot. Again, I'm going to enjoy this weekend. Hopefully there's some good fights this weekend to enjoy. But it's been so busy. I mean, if you look at the channel here, just as an example, just look at how much growth the channel has been in right now. So like look at just the last day. These streams are everything over the last day. So like this morning stream, FOMC stream, FOMC morning stream, AMD earnings, and then Aapl earnings today here. So in the last 24 to 48 hours, we've had 1, 2, 3, 4, 5 streams. And it's been great for growth, obviously. Like, FOMC, we got 25K plus viewers and all that stuff. So it's been great, but it's been busy. I'm going to enjoy this weekend. Where can you sell your physical gold? I mean, anywhere you want, pawn shop, jewelry store, gold, person, consumer, your neighbor, whoever wants to buy it, really. Canelo fight this weekend. Nice. Is there a UFC fight this weekend? Let me see. Not, I'm guessing, because there is. Oh yeah, we got Sterling versus Cejudo, Bilal versus Burns, Jessica Andrade versus Jan, uh, Diego, and that's about it. Kron Gracie versus Charles Jordan. That'll be good. That's the prelims: Drew Dober, Devin Clark, Kennedy. We got some good UFC fights this weekend, so I'll enjoy that, man. I'm excited. I'm gonna enjoy the break, you know. Yeah, for sure, 100%. Again, that's what I'm saying. If I'm buying a lot physical gold, you know, whenever you buy anything, you know, quantity cuts down on fees. You know, like if you want to buy products off of Alibaba, for instance, you know, say you want to buy yoga mats from overseas. You know, if you want to buy 50 yoga mats, it's going to cost you. You're going to pay a premium, you know, for that. You know, per yoga mat, you're going to pay much more. If you want to buy 1,000 yoga mats, that price per yoga mat is going to drop drastically, and gold is no exception to this rule. This is pretty universal rule in commerce and markets. And again, gold is no exception to that. And so, you know, somebody asked, hey, should I buy, you know, a gold ETF or whatever it is, or futures contract of gold, or should I buy physical gold? It depends on how much you want. If you're buying a lot, you know, there's some arguments for buying physical gold. If you're buying a little bit, you know, I would just buy the futures contract or whatever. But again, it's completely up to you all. I have no idea what I'm talking about. I might be wildly wrong about anything and everything. Don't sue me. Not an investment professional. We're not liable if you lose. All that good stuff. Yeah, I know about the UFC. I watch almost every UFC event. UFC is like every weekend. Yeah. I don't know. I didn't watch the last card. I know they have that like crazy good Russian dude who's been knocking everybody out in heavyweight. I didn't catch it though. I think he fought Curtis Blades and beat Curtis Blades over the weekend, if I remember correctly. But I didn't actually watch. I watched the replay online, but I didn't actually see the fight live. Yeah, for sure. Long term is how you want to do it. Yeah, we got Coinbase earnings too today. Coinbase, Square. The people behind Cash App. You know what I mean? We just got a lot of stuff. All right, guys. Apple dipping down. It's at 165. We are breaking down a little bit. Is there some arguments in terms of buying the dip in Apple? Let me know what you guys think. Yeah, AI is getting so good, dude. So good. Shopify fired 20% of staff, and the stock is up 20%. Honestly, that has been a very common trend this year regarding laying off people, and then the stock price goes up. Again, we've seen that this year with Apple. We've seen it with Amazon. We've seen it with Intel. We've seen it with a lot of different companies. Have been Facebook Meta. Facebook Meta did the same thing, and so we're seeing that a lot lately, which is, again, companies laying off some workers. It's improving their margins, is why, you know, the stock price goes up when they lay people off. It's because it's helping their margins. I think with the inflation and stuff like that, their margins are getting affected by it. So yeah, Apple dipping down here. Again, we're gapping down a little bit more. I think we got to look at like a daily chart for Apple to see kind of where we're at now. Apple is green on the, or Apple is slightly red on the year. Let me see what exact price point. We're at 165.20s. So yeah, Apple is slightly red on the year, but pretty flat so far on the year here. We'll see if it holds. But all right, guys. And you can kind of see Apple pulling back a little bit, but bouncing back some over the last couple of minutes here, back up to 164.40s. Very choppy market right now. Not an easy market to trade, not an easy market to make money in. Just very choppy, very slow. What is bullish for Bitcoin? I don't know. It depends on how you look at it. I'm not sure. What's the correlation with Bitcoin and Apple, guys? Chat, y'all help me out here. Apple buyback. Yeah, I heard a lot about the Apple buyback. Again, we'll see. We'll see. Chipotle is looking for 10% unit growth in the long term. Wage expectations are normalizing. All right, so U.S. Chairman Gary Gensler says the SEC is focused on identifying and prosecuting any form of misconduct that might threaten investors, capital formation, or markets. Senator Banking Chair Brown says hearing on bipartisan cannabis reform bill could take place as soon as May 11th, according to NBC. Man, they've been pushing this along for freaking, I don't even know how long they've been saying they were going to legalize. Again, I'm not saying I'm for or against it. I'd rather not waste tax dollars on it, I guess. You know. All right, guys. So, yeah, AMC actually ripping up a little bit, almost up to $6 here. So, hey, I'm for it, man. I hope it keeps going up, you know. I'm for it. We're in AMC, and we've been in it for a while. We're in gold, too. Yeah, I think I've seen mostly bulls for Apple so far. Like, mostly seen bullish traders regarding Apple, I think. Yeah, I've mostly seen bulls. And again, Apple earnings are generally pretty big here. All right, guys. Again, Apple at 165.50s, 165.50s. So the El Salvador president officially signed a law eliminating all taxes on income, property, and cap gains for tech innovations. It's a good idea. Kind of bring some tech stuff to there. What do you think about AMC? AMC's up to $6. We'll see if it keeps moving up. I know a lot of people have been pushing for a squeeze lately. Again, we'll see if it happens. I've been in AMC for a while. My average is $3.86 is my average for AMC. So we got a pretty good average in it. So again, I hope it keeps going up. Yeah, I don't know if there's a correlation. Are you not a technicals guy? I mean, I am. I'm just asking if anybody has seen any patterns with regards to correlation on Apple and Bitcoin. There doesn't need to be a correlation. I'm just asking if there is one. Somebody else asked me that, so you know. I don't typically watch Bitcoin with Apple, but Coinbase is the more important one. I mean, Coinbase obviously is going to impact and be impacted by Bitcoin is obviously going to be impacting and be impacted by Coinbase earnings. And so that's a very important one to watch too. Will coin pop because of the increased crypto trading volume? I don't know. I have no idea. Because today is Apple Q2 earnings. Earnings don't always go by the exact fiscal year. So some companies are going to be reporting first quarter, some are going to be reporting second, some are going to be reporting all these different numbers. They don't always technically go by the exact fiscal year. So sometimes they have their own versions of quarters or their own specific quarters, sets that they use. All right, so again, Apple bounced it all the way back over the volume-weighted average price. You can see the SPY over 405s again at 405.50s or so, testing the 200 EMA and the volume-weighted average price level. Again, we'll see if it holds. How about Coinbase revenue? So yeah, Coinbase is expected to show $1.44 loss per share on 0.22 million, so 220 million in sales. So very low sales count for Coinbase. Only 22 million in sales, or only 220 million is actually the number. It's 0.22 million. So, or no, this can't be right. It says 0.22 million. So 220,000 in sales? That can't be right. Anybody else show what they're expected? What is the expected Coinbase revenue number for you guys? What does that show? Because I'm showing 220,000. It's 0.22 million, which is 220K. That seems light for Coinbase. Let me look at the coin revenue graph here to see what other companies are showing with regards to Coinbase. Because yeah, I'm showing. It must be 0.22 billion, I guess. It must be 0.22 billion, I'm assuming. But again, I don't know for sure. But again, here's the Coinbase. Here's the trailing 12-month revenue. Here's the last quarterly revenue. Revenue is 0.629 billion. This has got to be. Let me look at a different source here. All right, 649 million, about 650 million for first quarter for coin. So whatever I'm using is wrong, most likely. So for first quarter, 650 million. So it looks like whatever I'm using is wrong. Yeah. Now I'm seeing the other one. I was using Earnings Whisper, but it looks like they're just wildly wrong. Well, coin pop because of increased crypto trading volume. Maybe. I don't know. Short Apple. Yeah, 655 million is what they're expecting for coin. And we'll see what happens. It'll be interesting too. Looking at our poll numbers on Twitter here. We did a Twitter poll. Let's see what we showed. All right. 52% are bearish, 48% are bullish on Twitter. On YouTube, out of about a couple hundred votes here, about 49% think that Apple's going to beat, 34% think they're going to miss, 17% think they're going to come in as expected here. Yeah, for sure, Gav. 100%, dude. For whatever reason, it blocked your trading, but I already blocked that comment, but yeah, he said short or long only. Do it after news and first move shows up, because those $10 moves can, move quick when the numbers just drop. Yeah, that's with the way I trade. I don't ever try to buy something up ahead of earnings, not unless I've already established myself, a position in them. Like if I've got a position in something already, I'll hold it through earnings, but I'm not going to take a gambling position ahead of earnings, just kind of gambling on what the earnings report's going to show. Nobody knows. And it's really easy to get wrapped up in the rush and the thrill and the butterflies in your stomach of kind of gambling away your money, but it's very risky. I've seen a lot of traders come and go where like they just can't help. They buy like big put options or big call options ahead of earnings, and they might make some money. It kind of gets them really addicted to it, and then they just can't stop gambling on earnings plays. And a lot of the time, it'll just go wildly against them eventually, and they'll lose everything. So just be careful, guys. There's no reason to take big positions. Nobody knows what Aapl do for their earnings report here. Nobody knows. Nobody understands what they're going to do. Unless it's like super insiders. So let's look at the EPS graph here for Aapl and see what they've been looking like lately compared to what they're going to potentially do today. Looking at this number, here is the quarterly EPS graph for Aapl. The quarterly EPS graph. This is what we're showing for Aapl right here. Is the quarterly graph. And again, you can kind of see last time they dropped 188 EPS, 188. Compared to today's 144. So they are going to dip a little bit. This next blue candle will look something like this if it comes in as expected. So it will be a little dip there. 650 million and Apple's expecting 92.94 in revenue, so we'll have to look that up. But yeah, so again, they're expecting $1.44 EPS. We'll see if they show that. If we look up their revenue graph here, if we look at their revenue graph, let's see what they showed last time for revenue. So here's their revenue here. Look at the market fly back up here. So the market's bouncing. Let's drop this. So again, here is the revenue graph. It is at 117.15 last time. So again, they'll be slightly over, kind of similar report here, where we're going to get a little bit less than last time in terms of revenue if we come in at expected. We could always get higher than that if we beat EPS and we beat revenue, of course. But for now, that's what we're looking like. And again, we'll have to wait and give it some time. Still got some time before the numbers come out. I'll put the timer up. All right, so it is. Look at the SPY rip up here. We're going to put a timer up to the other earnings that dropped today. Here's the timer for the other earnings that come out. Opinions on coin. Coin will be interesting to see. I think it's a really interesting quarter for crypto. So yeah, I think it's a really interesting quarter for crypto. Look at this big rebound here. Aapl is kind of helping the market bounce back a little bit. SPY still at 406 is here. Very choppy day, though. And so if you're just playing the range, I mean, we're pretty close to the top of the range here. Does anybody, I've always thought about a strategy of waiting for choppy days and then shorting at the top, covering at the bottom of the daily range. Like, for instance, if you kind of short up here as stocks start to get up here, and then you cover at the bottom of the range, like down here, down here, down here. Does anybody have a strategy that's like that, that works? I'm open to hearing about it. It's interesting. We've had a lot of choppy days recently, and so. All right, and again, market's starting to bounce back. We'll see if it holds now over the 200 EMA, over the volume weighted average price. that works, of course. Yeah. Will the SPY go up if Apple earnings are good? It depends on if Apple goes up. The SPY will go up if Apple moves up because Apple is such a heavily weighted stock in the S&P 500. So Apple is, I believe, number 1 in terms of weight. I think it goes Apple, Microsoft, Amazon. I have to look at what number 4 is. I think Tesla is number 6. But that's in terms of weight, that's the weight of these. All right, guys. So we got over 200 people here. We still got some time, but Coinbase earnings drop, SQ earnings drop, Carvana earnings drop, Lyft, Dash, Expedia. A lot of earnings coming out today. Bill.com. So again, look at the market ripping up here. All right, guys. SPY at 406, 405, 80s. Yeah, I don't know if it's about pulling anything. I think sometimes stocks are not just going to go straight up. It all depends on what's the sentiment of what's going down, in the area for stocks. Like sometimes microchips are struggling, sometimes they're doing well. AMD, a lot of people were arguing that AMD was just extended, in all honesty. So like AMD had a huge day today, man. Wow, look at AMD today. I didn't even see it. I really thought about buying this dip too. 87.50s for AMD. Huge rebound here. So AMD has effectively rebounded all the way from their earnings, basically right back up to where they were before. So they're kind of flat on their earnings report. And again, it's given me more conviction in taking those earning dips. Like stocks that perform well for earnings and then drop big percentages. Those are some of the most profitable trades I've ever gotten in. They just work. They're accurate. They work for me at least. I can't guarantee they're going to work for anybody else. Of course, nobody knows what they're going to do. But yeah, it's one of the most powerful ways to trade, in my opinion. All right, so we're pulling back to the 200 EMA and Apple. I'm tempted to buy the dip, but yeah, look at AMD flying back today, man. Wow. Yeah, I don't know if anybody is, man. Ben says Bears are gonna have a tough time. Again, I don't know. I listen. I hear it all day, man. I hear Bears are in trouble. Bulls are in trouble. Bulls are dumb. Bears are dumb. I hear it all the time. Anytime I hear it, I'm immediately skeptical. I think at this point I've been conditioned to at this point I'm conditioned to be skeptical. You know what I mean? But we'll see. Again, Apple has the chance to prop the market up. We'll see if it does. Again, Apple pulling back. It's at 165.80s, 165.80s. AMD at 87.30s. Collaborating on AI chip with Microsoft. AMD. Yeah, so that's what's going on. So Microsoft is investing in AMD in their AI situation. Yeah, makes sense. Yeah, that 9% rally. Yep, 100%. A lot of puts are going to be upset. I think the markets are reclaiming some of the imbalances caused by the fast sell-off, caused by those banks. Yeah, for sure. Honestly, I was trying to tell people, like, as the banks fell, I was trying to tell people, hey, like, the market is reacting to the banks. You know, and a lot of people argued with me, to be honest. It's surprising, like, how confident people are in, like, wrong information. Again, like, markets are going to follow banks, not completely directly, but it's like banks are weak. Bank weakness happens and sympathy happens and drags other banks down. When other banks fall, other banks are more largely weighted in the S&P 500, and so in turn the S&P 500 drops. And so again, bank weakness certainly makes the market skeptical and makes the market drop as well. And that's kind of what we've been in for the last couple of days, really the last couple of weeks here. FRC sparked it off, of course. Then you got WAL struggling. Western Alliance dipped heavily over the last couple of days, got halted multiple times today around 10 o'clock, 11 o'clock. We had, what was the other one? PACW, Pac West Bank, tapped 240s this morning. So a lot of weakness there. And again, if you look at the SPY has been, struggling today too, gapping down some. Market has overall just been weak, dropped from 417 at the highs, which were really like the yearly highs, all the way down to 404s this morning. But again, we're up still a lot over the last 6 months. Like if you look at a 6-month chart, we've been basically in an uptrend since October of last year. So short term, maybe we could argue any specific direction. But again, I think a lot of people have their eyes on banking to see what's going to happen. Right, the correlation between those two banks halting and unhalting in the E-mini today was undeniable. 100%, man. Again, people argue. I don't know. They argue. It really, I think trading is one of those things where people rush to claim they're good or rush to claim that where they know what they're talking about. And again, I've experienced that as well. When I first started years and years ago, it was kind of a fake it till you make it scenario, of course. But I think trading and investing is one of those things where people want to claim to be more knowledgeable than they actually are. And I see it all the time, but it really is something that the banks drug the market down for sure, without question. And again, markets have bounced back a little bit from that. Apple earnings are going to be very significant, very important to watch here today. If we only choose two companies, I'm going to choose Microsoft and Apple without question. What does the N stand for? NVIDIA, I'm assuming. I'm going to choose Microsoft and Apple, though, without question. Maybe Amazon. Amazon, Microsoft, or Apple. One of those three is what I would choose. All right, guys, vote on our poll on Twitter. Give me a follow on Twitter's @Beginner Trades. Yeah, Microsoft is just huge, and the AI is, something to be confident in. I think. All right, guys, we got a lot of earnings dropping in about 10 minutes. 10 minutes for a bunch of earnings to come out. And again, let me know what you guys like the most today in terms of earnings. What do you think is going to go up today? And what do you think is going to go down? Is a good question. What's going on with Barstool? What's going on with Barstool? All right, again, AMD at 87s here. Is this for them firing Ben? Again, I haven't. The only thing I ever watched from Barstool was the pizza reviews, to be completely honest. But again, I'm curious about what's going on. Aapl up, yeah. Aapl is up versus opening bell, down on the day as a whole, though. Microsoft at 305s. Here's the Q. Q is going to be wildly affected by a lot of this stuff too. So again, 9 minutes here, 9 minutes. Yeah, most of the market is sideways right now. So most of the market is sideways. So Barstool was acquired by Penn Gaming, right? All right, guys. Aapl back over the 200 EMA and the volume weighted average price. You can kind of see these are the two main indicators I watch, just because these are longer term indicators, relevant trend indicators. And again, the market is mostly sideways and choppy right now. Yeah, I mean, market is down today. Let me change this music here. I don't know if I'm feeling this one. So the timer is not for Aapl earnings. So this is just when the closing bell. The timer is for the closing bell. Aapl earnings are scheduled to drop at 4:30. So once the closing bell happens, we'll set the timer for Aapl, which will be 30 minutes after the close. Technically, that's when they are scheduled to release it. Again, we don't really know when they're supposed to release, but it's supposed to be sometime after the closing bell. Specifically, 4:30 is when it's really scheduled. So yeah, Western Alliance is fell over 50% today following news the bank is exploring a sale. WAL. Again, Q testing lows. Apple back down under 200 EMA, still over the volume weighted average price though. Yeah, I'm just hoping that we get good data here today. Again, who knows? All right, guys, we got about 4 minutes until the closing bell, and we got a lot of stuff dropping prior to that. WAL seeking legal options against FT for false information. Who's FT? Which source is that? I'm assuming that's who spread the rumor. You think the Fed can let Apple pump the market so we can all spend? I don't know. John, if I hadn't already hit my targets for the day, I'd be watching Apple, E-mini, and dollar index. While actually on the NASDAQ, that's about half of my strat right there in one sentence. Yeah, I mean, I get it. I use pairs trades too. Like I watch a lot of stuff that influences the E-mini and the S&P for my trading. And so I'll look at a lot of stuff. Like I'll look at Microsoft, Apple, everything that influences my potential trade on the E-mini. Whatever moves the S&P, I'm watching it for the most part. Disney back down again today. I'm thinking about buying some more here, but if I do start, it's going to be a small trade first. We'll wait, let Apple numbers come out, and then maybe do something. Financial Times got you. All right, guys. Again, we got about 3 minutes here, but remember, Apple earnings aren't scheduled to come out at exactly 4 p.m. It's going to be sometime after 4 p.m. All right, guys. So again, cube testing the lows. Let's see what the SPY does. The S&P 500 is doing. Pretty choppy day. Again, I think the whole market is kind of anticipating the Apple earnings and just kind of sitting back. Again, Apple earnings are scheduled to drop in about 30 minutes or so, maybe a little bit over that. But we still got time. Again, Apple earnings are going to be a little bit late. Yeah, so we're going to watch. So, again, here's the schedule right now. So, SQ scheduled for 4:05. Coinbase scheduled for 4:10. DraftKings is scheduled for right after the closing bell. And, yeah, we're going to cover all of these, to be honest. The main one that drops right at the close is going to be Expedia. That's the only really one that's scheduled. And Dropbox. Expedia and Dropbox are both scheduled to drop exactly at 4 p.m. SQ block is scheduled for 4:05. So, it's going to be in about 6 minutes. Apple scheduled for 4:30. DraftKings is just sometime after the closing bell. And so, again, we're going to stream that too. Y'all stick around. And, yeah, we'll see if we get something good. All right, guys, 30 seconds until the closing bell. Remember to hit the live button next to the play button. We're going to cover all the numbers today, all the big numbers, all the big moves from earnings. Stick around. We're going to cover all of it, guys. If you haven't already, hit the notification bell. We appreciate it. Again, here comes the end of the market session. And again, we got a lot of stuff coming out after the closing bell. So again, stick around, hit the notification bell. We appreciate it. Hit the subscribe button, not the Xbox. All right, we'll get the timer done. And we're going to go ahead and reset this timer now. There is the time. So we're going to go ahead and make this 30 minutes away for Apple earnings here. All right, so there's the close. Let's take a look at some of the stuff that's scheduled to drop at the close. SQ, nothing. DraftKings, nothing yet. DraftKings scheduled, again, let's look at, what was the other one? DraftKings scheduled, there were a couple that were supposed to drop after the close. It was Expedia. All right, let's pull some stuff up, see if we can find anything. Expedia. Again, nothing out yet. Apple's moving, though. All right, Expedia down. I don't know if the numbers are out for this yet. All right, nothing out for Expedia. Nothing out for Apple yet. Again, SQ, nothing yet. Bookings, BK&G dropped adjusted EPS of $11.60 a share versus $10.61 expected. Revenue of $3.8 billion, better than the $3.7 billion estimate. So BK&G better than expected EPS and sales. The FDIC is supposed to release a plan next week to refill insurance fund. Big banks will reportedly pay more to refill insurance fund under the FDIC plan, and smaller banks with less than $10 billion in assets avoid a fee altogether, according to Bloomberg. Again, nothing out yet. DraftKings is scheduled to drop sometime. I don't think it's out with theirs yet. Again, Square scheduled to drop theirs in about 3 minutes. 3 minutes here, team. And we got the timer up here. Let me put that at the corner of the screen. There we go. Coinbase is scheduled for 4:10 market time, so we still got a couple minutes for Coinbase before theirs come out. Coin's not out yet, not that I see at least. Let me look. Yeah, Coin, you'll always be able to tell from volatility, and we don't have volatility yet for this. So Bookings is out. Coinbase is not out with theirs yet. SQ's not out with theirs yet, although SQ is down to 60.1 today. Expedia looks like they dropped their numbers here. We'll see if we can find Expedia numbers. Carvana. Expedia posted 95-cent loss per share on $2.67 billion in sales versus 3-cent profit per share on $2.67. So Expedia lost way more than expected here, it looks like. They thought they were going to make 3 cents a share. They ended up losing 95 cents. Revenue of $2.67 billion versus $2.67 as expected revenue, though. So Expedia, I don't know how they're up right now. They had a big miss, at least what it's showing here. I don't know why they're up like this, but again, Coinbase, CBNA, Carvana, nothing out for these yet. Just kind of hanging out, waiting here, team. No numbers yet. Patiently sitting back, waiting for the numbers here. We got about 1,000 people here, guys. So we also are going to throw it in sub-only mode. And so if you have not already, team, hit the subscribe button, guys. Help us hit. We should hit 106,000 subscribers today. I think we should hit it. Yeah, we need 15 subs. We're definitely hitting that today. So hit the subscribe button, guys, if you haven't yet. We appreciate it. Yeah, so again, we're still waiting for the numbers here. I don't see anything out yet. Except for, again, we did Expedia, which did worse than expected for EPS and neutral. Oh, okay. Here's the Expedia numbers. We're putting these numbers out in chat. And again, subscribe, guys. We cover all the data quick. Just me saying that should have brought us over 106. Oh, we did. Hey, thank you so much for the 20 subs that we just got in the last 30 seconds. Thank you so much, guys. We appreciate it. Again, Expedia missed. You can see the numbers actually up in chat. Gross bookings are up 20% year over year. Maybe that's what's helping them. Carvana is scheduled. All right, so in about 30 seconds, guys, 30 seconds, we got Carvana, Lyft, and SQ. The biggest one's SQ, but we're going to cover Carvana and Lyft as well. So again, in about 30 seconds, 20 seconds now, really, these numbers come out. Let's see what SQ shows, how it affects the broader markets. Be ready. All right. Again, about 10 seconds. All right, and there's 405. They're not out yet. You can kind of see the movement here. So here's SQ on the right. Let's see if it moves. So they're supposed to come out just now. Let's see what happens. Let's look at Carvana. Let's look at Lyft. Dropbox posted 42-cent EPS versus 35-cent expected. Revenue of $611 million versus $601 million expected. So Dropbox beat EPS, beat revenue. Nothing for SQ. Nothing for Carvana yet. All right, Lyft is out. Lyft posted revenue of $1 billion, up 14% year over year. Adjusted EBITDA was $22.7 million. Let's see what their EPS was. So Lyft is out with theirs. I'm trying to find it right now. Revenue was $1 billion, though. I know that. Bro, I swear, dude, finding the EPS in some of these is like freaking a needle in a haystack, man. They make it so difficult, bro. Why don't you just give me the metrics at the very beginning of your freaking report? Why do you got to fluff things so much, companies? Like, why, man? Just drop the numbers here. Nobody cares about any of this stuff. Like, we just want to see the actual metrics. Again, $1 billion revenue for Lyft. Guidance, they're expecting $1 to $1.02 billion. DoorDash posted revenue of $2.04 billion versus $1.92 billion expected. Fiscal year gross orders 63 to 63.5 versus 61.37 expected. So better than expected guidance numbers here for DoorDash. Better than expected revenue as well. I don't know what their EPS was. Freaking Lyft over here, man. Just all right, guys. SQ's not out with theirs yet, though. Nothing for Carvana either. If anybody can tell me what Lyft's numbers are, I appreciate it. All right, 40-cent revenue beat for Lyft. So Lyft had 40-cent revenue, beat the 10-cent loss estimate, I think. First quarter loss per share of 50 cents versus 57-cent estimates. So Lyft did better than expected on both metrics, it looks like here, I think. Let's see what it's doing. SQ's still not out with theirs. Apple's still not out with theirs yet. Lyft is dropping big, though. Look at Lyft all the way down to 930s, 940s here for Lyft. Again, we got DoorDash numbers here. I'll put these numbers up in chat so you can watch them, but Coinbase out with their numbers here. Coinbase should be dropping theirs in about 2 minutes. Or no, it looks like Coinbase might be out. No, there's a shareholder letter. All right, Coin is out. Looks like Coin is out with their numbers. Coinbase showed Coinbase up to 51s right now. All right, I don't see what Coinbase is yet anywhere. At 50.6, so it looks like they were somewhat good. Let me check another source here for Coinbase. Coinbase is being a little bit harder to find. But yeah, nobody else has it either, it looks like. Yeah, so maybe this is just, I don't think Coinbase is out with theirs yet. I think first quarter revenue for Coin, $772.5 million. Estimated $653.8 million. So better than expected revenue for first quarter trading volume for Coinbase was $145 billion versus $147 billion expected. So lower trading volume, but higher revenue for Coinbase. I don't see what their EPS is yet, though, but that's what it looks like Coinbase came in as. All right, so Coinbase loving this though, up to 52.30s, 52.40s for Coinbase here. All right, so yeah, here's the Coinbase full numbers. All right, so we're gonna put the full list. Coinbase posted 34-cent loss per share versus 136 loss per share estimates. So much better than expected EPS. Sales of 772.5 million beat the 649.4 million estimates. Trading volume was light compared to expectations for Coinbase. But Coinbase is loving this. It's up to 53s right now. 53s for Coinbase here. We'll put the lift numbers up in chat as well. Monster dropped 38 EPS versus 34 expected. Profit 1.7 versus 1.69 billion expected here. We'll put this number up in chat too. All right, so those are all the big boys here. We got all those basically lifted here. Now we wait for Aapl, the big boy, coming out in about 20 minutes or so. They've all been on time today for the most part. Bumble posted adjusted EBITDA of 59.3 million, expected 54.8 million, so higher than expected EBITDA, which is earnings before interest, taxes, depreciation, and amortization. Revenue of 243 million, expected 241, so higher than expected EBITDA and revenue. Paying users 3.46 million versus 3.44 million expected. ARPU of 22.83 versus 22.8 expected. So Bumble, better than expected all the way around there. BMBL is the symbol. Coinbase flying up though, over 53s right now. Carvana, let's check Carvana here. Carvana's hard to find here, to be honest. Look at Coinbase dipping down a little bit. The Carvana reported the best quarter in company history for adjusted EBITDA and total gross profit per unit, but it's not showing the actual numbers here. Anywhere I look for Carvana, I don't see any actual numbers. Again, Aapl at 165.60s here. Coinbase now dipping down a little bit. What's Bitcoin doing despite all this stuff? Bitcoin not really reacting, which kind of makes sense. Here's the SPY. So SPY pretty flat still. Again, the big boy is Aapl. Aapl is the largest weighted stock in the S&P 500. And so we still got 15 minutes for Aapl earnings here. I told you guys it would be 4:30. And again, we don't lie. Hit the subscribe button if you haven't already. Hit the notification bell. We appreciate it. Let me switch this. And remember, Aapl, we'll stream the full call live as well for Aapl, so you don't have to go anywhere. You can watch the whole thing here. Carvana, yeah, Carvana did the best quarter in history, and it is flying up. Carvana's had a tough, 6 months. That's the last 6 months of Carvana, so I mean, it needs this run, to be honest here. Been a tough year. Carvana up to almost $9 at $8.75 right now. Oh yeah, SQ. What happened to SQ? Okay, SQ just dropped theirs. They're late. That's the one I forgot about. Block posted EPS of 40 cents a share versus 34-cent estimates. Revenue of 4.99 billion versus 4.59 billion estimates. So SQ, much better than expected EPS and revenue. We'll put these numbers up on screen right there. You can find them in chat. Better than expected EPS, better than expected revenue here. And SQ is flying up to 64s right now. And the market needs this, honestly. Again, Apple's the determining factor here, but the market needs this. And again, SQ is up big, up to $65 a share right now as we speak here. So yeah, we'll see if the market keeps liking this. Again, we'll see. Yeah, Coinbase pulling back now. And let's watch 50. Yeah, SQ had better than expected EPS, and then it dipped pretty fast. But let's see. So SQ is very volatile right now. So again, we got the numbers up on screen for SQ. Let's see if they posted any other metrics that we should be paying attention to. Yeah, I don't know why SQ is acting like this, but it's moving down now. So it ripped up all the way to 65, is back down to 61s. Coinbase still at about $51 a share, 51 bucks a share. Apple's not out with theirs yet. Apple's drops at 430 today. So again, Apple at 430, nothing for Apple yet. Still waiting here. SQ at $61 here, 61. DraftKings ripping. Did DraftKings finally release? Yeah, DraftKings up to 22, 23 bucks a share here. So look at DraftKings. DraftKings popping up to 22.60s right now for it. I'm assuming on good numbers. DraftKings first quarter revenue $770 million, raised fiscal year guidance midpoint to $3.18 billion, and improved 23 adjusted EBITDA guidance midpoint to $315 million. So again, DraftKings did much better than expected in terms of revenue. They expected 694, they showed 770 million. So way better than expected, but now they're retracing back some. I don't know what their EPS value is though. I don't see it anywhere. But DraftKings, okay, there it is. 87 cent, beat the 88 cent estimates. Here is the full DraftKings numbers right here in chat if you want to see it. Again, we still got about 14 minutes before Apple earnings come out, guys. About 14 minutes. Neo, did Neo have earnings today? Nope. Again, DraftKings over 22. I'm going to put up SQ again. Here's Square. Pulled back and then bouncing pretty fast back up there to 63s now for SQ. And again, Apple's supposed to drop theirs at 430 here, team. 430. Yeah, y'all be careful. It is choppy for sure. DraftKings all the way back down under 22s, under 20s, or under 2250s, or under 2150s. Down to 2144 for DraftKings. So DraftKings turning. SQ moving back up though, hitting 64s right now. And again, DraftKings at 2140s right now. Now it's back up to 2170s. So again, DraftKings is up, but we'll see if it holds. All right, there goes Apple moving up a little bit. I don't know if it's just sympathy with SQ or Apple numbers are out. Let's see. All right, Apple moving here, guys. Apple at 166 right now. All right, waiting on Apple. Apple scheduled for 4:30. Remember, Apple earnings are at 4:30. It's at 166.20s right now. Nothing yet. It is moving pretty volatilely though. I'm pretty sure they're going to remind everybody the savings count a lot. All right, there's Apple breaking highs again at 166.50s here. I don't think Apple's out with their numbers yet though. Again, Apple moving up. I don't think it's out with their numbers yet, but it's moving here. Tim Cook is guiding Apple through the storm, says Wedbush's Dan Ives. Again, Apple's moving up. I don't know if it's sympathy or what, but Every source I have has not saying anything yet with regards to Apple. A lot of people are saying Apple missed, or Apple might miss, but runs on buybacks. Again, Apple numbers are supposed to come out in 10 minutes. You guys, 10 minutes. All right, SQ still up pretty sizably here. Again, Apple is scheduled to drop their numbers. Apple is scheduled to drop their numbers at 4:30 market time, guys. 4:30. Yeah, there could be a timer in the top right corner. There might be. It's possible there is. I'm not sure if there is or not, but it could be there. Coinbase, again, Coinbase revenue 773 versus 654 expected. Trading volume was 145 billion. They expected 147, so a little bit lighter trading volume than expected for Coinbase. Second quarter subscription and services revenue was only 300 million versus 321 expected here. So if we look at Coin is up on the better than expected EPS metric, but revenue metric was higher as well. But again, subscriptions were down a little bit relative to what they were expecting. Again, there goes Apple dip here. Again, Apple at 166 right now. Again, we still got about 9 minutes here. So 9 minutes, guys. Y'all be safe. All right, remember the earnings call is at 3:30, or not 3:30. I'm sorry, at 5 o'clock. The earnings call for Apple starts at 5 o'clock. And so again, I would never pressure you to subscribe, but if you don't sub, I'll hate you forever. Subscribe now. Hit the subscribe button. You know you want to. Just try it one time. It might feel good. Hit the sub button. Hit the notification bell. We'll be live tomorrow. Tomorrow is actually a really busy day. So again, today we have Apple earnings. Tomorrow we've got AMC earnings. We've got unemployment. We've got non-farm payroll data all dropping before 9 a.m. All dropping before 9 a.m. tomorrow. It'll be very volatile in pre-market. Join my live stream tomorrow. Again, hit the sub button, hit the notification bell, and you'll be able to listen and watch all of it here. But yeah, crazy busy day tomorrow. And again, we'll see if we get anything good. DraftKings, 87-cent loss versus 88 estimates. Revenue of 770 versus 705. Raised fiscal year revenue view to 3.135 to 3.235 from 305 estimates. So again, we'll see what happens. Yeah, definitely top three. Yeah, so if Apple beats, this is the last big earnings report. I mean, we have NVIDIA later in May, so we have NVIDIA in like 3 weeks. So NVIDIA is the last big one in tech and markets, really, because NVIDIA is pretty heavily weighted in the Q and the S&P. So NVIDIA is big still, and it's still coming soon, but it'll be in a couple weeks. Again, we also have AMC tomorrow, but in terms of weight, yeah, NVIDIA is the last big one. Apple's the largest weight of the S&P 500 regardless. Again, nothing out yet. We still got about 6 minutes here. Again, waiting on Apple. Chopping back and forth right at the 200 EMA, the volume weighted average price level. So we're pretty flat there. Yeah, man, I told everybody that top was going to do that, man. Again, top was never going to hold. Like, this is an overseas pump and dump. You know, and it makes sense why they might be pumping this up is because they're not really going to have anybody to enforce it on them. You know, they could ride off into the sunset and not really worry about it because it's overseas. This is an overseas company. So it was almost certainly, I told people this when it first started, top was almost certainly like an executive insider pump and dump. I can't say for sure. This is pure speculation, but top was never going to hold the gains it made. It was never going to hold the gains it made. And you better believe, though, you're going to have a bunch of bag holders now sitting on huge losses talking about top is the greatest company ever. The community is going to make them feel all warm and fuzzy and just try to talk them into never selling. It happens every time. But yeah, y'all be careful because top all the way down to $10 now. People tried to tell me to buy it. I was like, no. All right, guys, 4 minutes. All right, guys, 4 minutes here. Again, Apple right towards the middle of the range of pre-market here, right around the previous closing price, right towards the middle range. Again, we'll see what happens, but right at the middle range here for Apple. And again, the earnings call still starts in about 30 minutes here. Yeah, AMD, did AMD fall back down? I mean, it ripped back up. It's basically flat from its earnings report, which I think is a win for it right now, especially with how much it was down. Chuck, you've got to be trolling. Of course not. Never sell road Bed Bath & Beyond all the way to delisting. I'm sure you're not alone. Spy dip. Yeah, Coinbase bounced it up a little bit to almost 52s. Here's the SPY right here on the right. Yeah, SPY just cracked lows. SQ pretty green from its earnings report. At this point in time, we got 3 minutes, guys. 3 minutes. Be ready. It's coming. All right, guys, again, 2 minutes. 2 minutes. Y'all be safe. Yeah, I mean, I don't think anybody knows what Apple's going to do here. I get a lot of people trying to make big predictions, but the reality of it is nobody knows what Apple's going to do. You might guess correctly. So that's certainly possible. Like, you might guess correctly, but nobody knows what Apple's about to do. And so y'all just be careful. A minute and 30 seconds, guys. All right, guys. We got about a minute, a little bit over a minute. Yeah, my prediction is that Apple's going to go up, down, or sideways. I'm not sure which one, but that's my prediction. All right, guys. So here we go. Less than a minute. Again, less than a minute. Apple at 166. Here we go. Remember, expectational numbers for Apple here, guys. 144 EPS on 92.94 billion in sales. Again, 144 EPS on 92.9 billion in sales, or 94 billion in sales is what's expected here for Apple. Again, we don't know what it's coming in. We're getting some volatility here. 30 seconds. 30 seconds. You can see Apple start to move leading up to this. 30 seconds. Again, we'll see if we get something good. Apple starting to move up in anticipation of this. Again, 15 seconds. Make sure you hit the live button next to the play button to make sure you're caught up on the stream and that you're not behind the stream. Again, hit the live button next to the play button. Make sure you're caught up. All right, there's Apple moving a little bit, and there is 430. All right, there's 430. Apple shooting up here. Wow. Up to 169s, guys. 169s. All right, Apple numbers are out. Unchanged year over year. 152 EPS. 152 EPS. Quarterly revenue of $94.8 billion. Again, $1.52 EPS on 94.8 billion expectations. So higher than expected EPS, higher than expected sales. Apple is flying up here. Just broke highs at 171.20s. Again, 152 versus 143. Again, we reported that before anybody else. Subscribe if you haven't yet. We'll put the numbers up on screen. Again, we reported that, read it straight out of the earnings report before anybody else did. Hit the subscribe button, hit the notification bell. Apple, better than expected EPS, better than expected sales, and pop it up pretty big. We're tracing back down to 169 here, but a big move for Apple. iPhone sales for 2023 in the second quarter came in at 51.33 billion. 51.33 billion. Quarterly dividend is being increased from 23 cents to 24 cents a share for the quarterly dividend. Again, from 23 cents to 24 cents a share. Apple, we're tracing back down some. So Apple back down to 167s, consolidating around the previous closing price level. And again, they did better than expected on EPS, better than expected on sales. iPad sales came in at 6.67 billion. Quarterly dividend is being raised from 23 cents to 24 cents a share. They authorized a $90 billion additional buyback, a $90 billion buyback for Apple here. And again, we're going to put all this up on screen. Again, a $90 billion buyback announcement. Still green from the report. They are raising their quarterly dividend. All right, so here is the big news that just came out with Apple. Again, Apple started to test the top of that range again, starting to head up, starting to move up a little bit. Up to 169 right now. Again, 90 billion buyback program, raised the dividend, better than expected EPS, better than expected sales. I don't know if you could do better than this for Apple. I mean, it did. I mean, it could have beat a little bit better, but yeah, I mean, it's certainly reacting well to this. Yeah, Coinbase is out already. But a big beat for Apple here for sure. Again, Apple up to 170s basically right now, 169.40s. Again, 152 versus 143 estimate EPS, so better than expected EPS. Sales came in at 94.8 versus 92.96 estimate, so better than expected sales revenue. They authorized a $90 billion buyback, which is big and very optimistic for the company. They raised the quarterly dividend from 23 cents to 24 cents a share. So yeah, I mean, very good earnings report here. Again, if you want news fast, hit the subscribe button. We're going to stream the full earnings call live here in about 25 minutes or so, guys. So we're going to stream the full earnings report as well. Shopify, that's the one I didn't cover. I think they dropped theirs yesterday. So Dragos, basically what you're saying is that you wanted Apple to drop, or you predicted Apple was going to drop, and so you're going to find one thing to try to criticize the earnings report for, and that's all you could come up with. Hey, makes sense, brother, makes sense. Again, Apple shooting up at 169s. I don't even know if it's going to hold here. We'll see if it does. Again, the previous closing price for Apple is at 167.40s. 167.40s. SQ starting to turn back down. It's at 61.50s. Yeah, if they say AI during the earnings report, then it's really going to go up. You know, at least it's possible for it to. Yeah, and I mean, listen, I'm not against you, Bears, at home. I'm really not. But, you know, we're just reporting on earnings here. So what they did was they did better than expected EPS. They raised their dividend. They did a $90 billion buyback. And so, I mean, all of that's pretty solid. Again, I'm not saying they're going to hold either. I have no idea what they're going to do. But, you know, don't get mad at the messenger here, guys, I guess is the best way to put it. Yeah, I mean, I agree. I think I haven't really been buying up any swing trades over the last couple of weeks because I'm not confident the market's going to keep pushing up, especially with the banks. And so, again, we're not really low enough for me to want to buy anything. We're a little bit too extended on the upside for a lot of these companies, to be honest. Hey, thank you, Lily. I appreciate it. Grandma's pension lives another day. Hey, that's right. It survives another day. It could survive another day. Again, I'm not even saying it holds. Like I've been saying this. I'm not even saying it holds. Seems like good report here. If we look at a 10-day chart, we're pretty flat over a 10-day period of time. If you look at a yearly chart, Apple's been on a pretty big run since January. I mean, it was down at 124s in January. It's all the way up to basically 170s now. And so, again, I'm right there with people who are saying it's extended. I kind of agree. I haven't been buying Apple, to put it into perspective, but I hope it goes up because the market kind of needs green right now, especially with this being like the last big, weighted stock for at least another couple weeks. The last one, I think, is NVIDIA. The market kind of needs green in that regard. So, again, stick around. We are going to stream the full earnings call. So again, we are going to stream the earnings call for Apple. So again, stick around. I will put this up on screen here. All right, so we'll put that up on screen again. Earnings call live at 5 p.m. Oh, NVIDIA is never going to stop saying AI on their earnings report. Again, if I were them, I would too. I mean, I can't even hate on it. I understand it. Yeah, free info. Listen, my big thing here is like I just want to create a resource and community of traders where we don't sell a course. We don't act like experts. Of course, we have sponsors. But I've been streaming for hours now, and I haven't plugged one yet. And so I'm about to plug one right now. But again, first plug over hours. Just like the radio, we have sponsors. And one of my sponsors is a funded account program called Top Step. It's really the cheapest way to get your foot in the door if you're day trading or wanting to day trade, but you don't have that much equity. Like my Thinkorswim account's about 50K right now. I got about 200K in buying power. But most people do not have that much money to trade. So I could day trade whatever I want, really, but most people can't. And again, most pro traders actually day trade futures instead of stocks because you can day trade the S&P 500 in futures with no PDT restriction. You can essentially trade the SPY and what's called the E-mini with no PDT restrictions. You can day trade short, margin account, buy market, buy bid, sell the ask. However you want to trade, you can trade it in futures with no PDT rule. You can trade currencies, commodities, the S&P 500, the NASDAQ. And again, there's no PDT in futures. And one of the cheapest ways to get your foot in the door is through these funded account programs. And Top Step is the most legit, in my opinion. Although they are a sponsor and I'm biased because they pay me money. But I do always try to stay transparent about that. But what they do is they give you a demo and they test your skill. So the base one's 50K. They give you a 50K demo. If you could hit 3,000 in profit on that demo without hitting their max loss and while following their rules, they'll fund you 50 grand afterwards with a 90% split. And so it really is a situation where you kind of have the best of both worlds, where if you lose, the base package, if you use my links, only 130 something a month, so it's very cheap. But if you pass it, once you pass it moving forward, you keep 90% of your profit after that. And so it really is a great situation that's a perfect middle ground for traders to where if you lose, it's not the end of the world, but you still get a lot of the benefits of trading. Once you pass the test, you still keep 90% of your profit moving forward. And so it really is a great way to test your skill. Most people are going to lose these because most day traders lose. A lot of people are like, oh, well, people lose Top Step. Of course they do. Most day traders lose money. And this is just a cheaper way in the beginning to test your skill. If you're good enough to pass it, you can get funded. If you're not, you would have probably lost more trading, a real account anyway. And so again, if you want to check them out, here is the link. Great way to help support the channel. They are a sponsor of mine. Of course, I'm biased in their favor, but check them out. No, I think they do it all across the world, but I would check with them first. Yeah, the numbers are out. They might be blocking me right now. Just to weatherman it really quick. They might be right here, in this general area. The numbers could be right here. They might be. I'm not saying they are, but it's possible that they are. No, that doesn't work as well. There we go. That's better. Yeah, so Apple actually pretty green from the earnings report. Rebounding a little bit from the red action it got on the day. Okay, so that is my reminder. I'm going to switch out these headphones. And we're going to put this other headphone in. Because, again, the earnings call starts. We're actually under. You can see the light blue line right here is the previous closing price. It's the level at which stocks go from red to green, green to red. So we are testing that break-even level on the day. And again, Apple was red on the day heading into this earnings report. This is why. Look at that bounce directly off of the 200 EMA for SQ. But yeah, Apple testing that previous closing level, which is this light blue line right here. Let me fix the music. Hold on. There you go. All right, so y'all can hear, correct? Yeah, the music just cut out because I had to switch headphones. How long have you been trading? 7 years. But again, I don't claim to be an expert. I don't act like a guru. I don't charge for content. Like, we put everything out there for free. Pressure generally kills profit, and so. But trading is a lot about learning how to trade under pressure. But yeah, I don't claim to be an expert. I'm green on the year on Thinkorswim. And so we're doing okay. But yeah, I don't claim to be good or anything like that. I think there's enough of that out there already. I just want to have a free community of traders. Apple now breaking down under 167s though. So Apple is technically red on the day, about flat from the earnings report. Hey, can y'all hear me? Sound check. Let me see. Can y'all hear me? Let me check. Hey, can y'all hear me? Okay, yeah, y'all can hear me. And again, the earnings call starts in about 19 minutes. In less than 20 minutes, we get the earnings call here. So stick around. Yeah, guys. So again, Apple bouncing. Look at the 200 EMA and the volume weighted average price spot. So it's bouncing directly off of that level now. And again, we still have earnings coming out soon, team. So we still have earnings coming out in about 3 minutes, or not 3 minutes, in about 17 minutes or so. Again, Apple bouncing pretty quickly back up to that 200 EMA volume weighted average price level. So pretty quick bounce. How can one be so affirming saying it will do this or do that? I don't know. I'm pretty much against like that type of talk. Like most of the time, I just tell people I don't know. People ask me all the time, bro. Constantly, people are asking me what something will do. Hey, what's Bitcoin going to do from the rate hike decision? You know how much like okay, you would have to predict the rate hike decision correctly, as well as predict what Jerome Powell was going to say in regards to sentiment, and then predict how Bitcoin was going to react to what he says. And again, a lot of people are going to try to take credit if they get it right, but a lot of it is just luck. Like a lot of people are just lucky in terms of their predictions for that type of stuff. Because it really is, a lot of it is a coin flip. But again, I have no idea how the market's going to react, how the market's going to do anything. Like we can, when economic data comes out, we can make certain predictions based off of what the numbers are. So we could say, hey, if the numbers come in higher than expected for jobless claims, for instance, today, we could say, oh, jobless claims came in higher than expected. If they come in higher than expected, that's better for market activity because that means less people working, less people spending, less inflation problems. So we can make predictions like that, but trying to predict exactly what's going to happen during economic releases, during earnings calls. Again, most people who get it right are just lucky because a lot of people get it wrong. And that's something I see regularly. Again, so I always try to genuinely tell people. Some people have criticized me for it, but I try to tell people I have no idea what anything is going to do for anything. We just report on it fast and let people react to it as soon as they can. Yeah, you can consider variables, sure, but what I always try to tell people is the more confident somebody is in a specific reaction to economic data or earnings, the less confident I am in them, because anybody that's been trading long enough is going to understand that we truly have no idea, not only what the earnings are going to be, but how the market is going to respond to those earnings. Again, Apple did great EPS, great sales, still down, or still not down. It's actually green relative to when the earnings came out. But the point is, it's very unpredictable. It's very coin flip like, and so I respect somebody that says I don't know more than somebody that tries to, act like they're just completely right about everything. Now we stream every day, every weekday morning. We stream. Right. A lot of people just wanted to suit their own positions in trading. And I get it. I understand. I think we all have bias. And so I'm not mad at bias. As long as you don't shame people. You know what I mean? Like, as long as you don't criticize, like, you get a lot of people try to talk smack to bulls saying, aha, dumb bulls. And then a lot of people try to insult bears too, but it's like, you got to just understand nobody really knows here, and you got to respect both sides and just call it for what it is. React to it is the best way I could put it. Like, reacting to data is much better than trying to predict data, I think. Yeah, sales are down quarter over quarter. Yeah, so last quarter Apple had they're down 4.5% for sales relative to the last quarter. SQ still holding pretty well though from all this gains and movement and other stocks. All right, guys, we got 14 minutes. We're gonna put a timer up for this now. We got about 13 minutes. Here's the timer. Hey, thank you. You as well, Sim. I appreciate the support, brother. Thank you, man. Emotions, 100%. Right, for sure. It really is business for me. I mean, I'm looking at it from a business perspective all the way around. Yeah, you're betting on probability, and I can understand that. Like, one of my most effective trading strategies, and the one that I've been using with great success over the last couple, months and over the last year or so, really is just looking for extension on the downside mostly. But I do have to kind of maneuver around the huge bears that we get towards individual stocks. So like Disney, for instance, a ton of bears. For whatever reason, just hate Disney. I love the Disney stock, bro. That thing has treated me very nice over the last year. And what I mean by that is, like, every time Disney dips down to 80s, 90s, I'm usually buying that dip. If you look at the chart, like, I can show you the trades I've made on Disney. And I've been into a lot of trades on Disney here. Like, I can go to show trades, and this is Thinkorswim. But, like, I make a lot of trades on Disney in this account, But, like, and most of these are wildly green. Like, most of these are very green. Again, I've been calling it out. I've been telling people when I'm getting in or whatever. But without fail, every time I buy Disney at those levels, somebody's always like, dude, this dude doesn't know what he's talking about. This dude buying Disney at $90, at $85. They'll call names, they'll insult, and it's just like, okay, time will tell. And typically time does tell that I'm right. But the point is, I'm making a based probability bet on this, because when I see Disney dip to the 90s, that's towards the low of the year. Disney is diversified in terms of the assets that it owns. Star Wars, Marvel, ESPN. I'm making predictions about, like, what Disney will do in the future with regards to, like, Star Wars movies. It's coming out with like 3 or 4 new movies and shows over the next year or two. And so I think when Disney dips down towards the yearly low, it's rational to assume that you could buy a cheap entry there and just sit on it for a couple months and let it bounce back. And that's been the strategy basically every time, where I'm like, okay, well, if it goes in my direction 5 to 10% quickly, I'll take profit if I need to. And that's what I did. I took profit at like 105, 110, buying it at 85, 90, selling at, 100, 105, 110. And then when it pulled back to the same level, dipped back down to 90s, I do the exact same thing. Snapchat, I did it on Snapchat a lot as well. But it's just betting probability. It's like, okay, well, Disney's strong. Long term, and even if it goes drastically against me short term, I could probably sit on it long enough and still be green eventually, as long as I'm okay with tying up that money, which I am. And that strategy alone, I've done it on Google, I've done it on Amazon, I've done it on Disney. I've just made very high accuracy trades getting involved with that. Again, over 70% is what I think. I can't say for sure, but I think it's around 70% plus in terms of accuracy. But it only works on blue chips. And I tell people this strategy every day, but it really only works with blue chips. Like maybe some speculative mid caps, but you got to be really careful. I think if like Peloton shows anything about mid caps, is that most of the time, mid caps, not most of the time, a lot of the time, mid caps can be overhyped. They're overpriced. They're too expensive. So people invest in mid caps like they're blue chips, like they can just let time heal those wounds. Time heals a lot of scars, but not in mid caps, because again, a lot of mid caps are overhyped as it is, and they'll drop huge percentages over a year or two period. And again, you could look at something like Peloton, Tilray, Beyond Meats. There's so many different examples of this that you just got to be careful. But if it's a blue chip that's been around for a century, like Disney, those are the ones that I'm willing to buy. Oh, bro, they got... Yeah, for sure. People talk so much smack when I buy Snapchat, and then it's like over the next couple weeks, it's just kind of crickets. It's silence. It feels good, man, honestly, because they can't say anything. They know at that point in time, they know like they were wrong and I was right. Snapchat too. Again, I've got in Snapchat a lot as well, but I'm less confident in Snapchat. What I like about Snapchat is that it's got hundreds of millions of daily active users. Like regardless of monetization problems, I think those type of user bases can heal a lot of things in terms of long-term, strength. As long as people keep using it, I know they have monetization problems, but like, that's why I make those dip buys in Snap, but I don't sit on them very long. Yeah, I mean, I'm not even mad about the old heads holding blue chips. I'm really not. Like the biggest edge, there's a lot of sensationalizing in markets. But the biggest edge you'll ever get is long-term value investing. Like Warren Buffett value investing, the biggest edge you will ever find in the stock market. And don't let anybody, a lot of people will try to talk you out of that. But listen, if you buy blue chip healthy companies and diversify into many different sectors, or you just make it easy and buy the S&P 500 or a broad market ETF like the Q or something like that, you hold that, it will make you on average, 5 to 12% a year. With including crashes. In crashes in between is fine. It will earn you that. And so if you use compounding with that, within 5 to 10 years, you can have a lot more money than people actually realize. If you add your yearly gains to those trades, if you compound it is what that is. That's the single easiest way to make money in the market. But yet a lot of people chase the shiny things, and I day trade. But day trade is something that you got to have understanding that it's going to take you a while to learn. And it's one of the reasons these funded account programs are so inherently useful is because most new traders day trade and they lose thousands. These funded account programs give them kind of a middle ground to learn. You can learn if you lose the funded account program, it's less than $200. Like it's not the end of the world. You're not going to lose, your life savings in your first try with it, like some people do in day trading. But if you pass it, you still get a lot of benefits. Again, it's just a way to save new traders money, in my opinion. And I'm not saying new traders aren't going to lose, because again, I think most traders are going to lose these funded account programs. But that's the point, is that you try to put up 10 or 15K, like one contract at the NASDAQ is like over 10K. So you try to put up 10 or 15K yourself, futures can go against you so fast, that it's just a lot safer to try the funded account program. And they get some hate, but I truly do believe that. And I think, and again, I'm biased because they pay me money. And so, of course, I'm biased in their favor. But yeah. I mean, Snap's cheap right now. Again, if I do buy it, I'm going to hold it for a while, though, I think. I'm pretty sure it can, but I'm not 100%. Just reach out to them, man. You can use the link in the description if you want, and just reach out to them. Yeah, dividend investing. In order to really make, like, a lot of people don't dividend invest because they're like, oh, well, I can't earn a living. It's like, yeah, to earn a living off a dividend, you need like $1 million or like at least 500,000 to make tens of thousands, depending on what you invest in. But it's still pretty good income, even if you're not living directly off of it. If you just put 100K or 200K into dividend stocks, so there's a lot of arguments for dividend investing, and I think, of course, like the obvious logic of dividend investing is that you're going to find companies that are going to pay you a dividend as well as go up long term. And that's the tricky part of it, is finding companies that are not just crashing down, that pay good dividends. But again, Apple pays a dividend. Ford, a couple good ones. Again, I don't know if they're going to go up over time. And again, I have no idea what they're going to do. Don't sue me. Not an investment professional. None of this is forward-looking statements. Always do your own DD and don't copy me. But yeah. All right, guys. Again, Apple earnings are about to start in about 4.5 minutes. 4.5 minutes. So stick around. We are going to stream the full thing. You won't have to go anywhere. You'll be able to watch all of it right here. So stick around. That's what they say. I'm sure they're going to pump the AI word as much as they can. There we go. All right, so yeah, we got it started here. We're waiting for the call to start. Starts in about 5 minutes. Yeah, man. A lot of people hate on the older population for holding blue chips, but it's like, dude, a lot of them are making more money than traders are, because they're sitting in Coca-Cola. I know, like my wife's mom, or my wife's grandmother. I was talking to her when I was her realtor for her home. I was talking to her, and she's holding Coca-Cola, and or she was for like 10 plus years. She had made a bunch from it, and so a lot of them, again, sitting on blue chips long term. People will talk you out of it. Like bears sometimes try to argue you shouldn't hold blue chips long term. It's the most ridiculous argument ever. Again, over a century of statistics and time data, S&P gives you 6 to 12% a year. It's a pretty long time. It's pretty vetted stats there. And so you don't want to underestimate how valuable long-term value investing can be. Gold is 4.5x over the last 20 years. So gold is up a lot too. And again, I'm not telling you to do anything, of course, but diversify your trading. Again, I'm not planning to hold Snapchat super long term. A lot of time, again, my strategy is very simple. I look for stocks that are down big, that are relatively healthy, and I try to buy them and sit for a couple weeks, maybe longer, to get a bounce back. And so Snapchat at 790s, seems pretty cheap. But again, it's not. I never take large enough size to where it's going to bankrupt my account. That's the key. Is you just don't take that big of size. You just trade smart, diversify. You're going to lose sometimes, but you got to diversify. That's the key. Chevron, good dividend. Yeah, I mean, I feel you, Josie, but it really is a long-term thing. If you're dividend investing, theoretically, long-term price movement should compensate for short-term downswings. Like, you're going to have stocks that are down and up over individual years, months, so forth. But the logic of it is that long-term, you should make that back. But again, I'm not telling you will. I really have no idea. But that's the logic, at least. It's long-term. You should catch it back eventually. Hey, thank you. I appreciate it, Josie. Thank you. That's no energy here. Other than that, I guess. Yeah, maybe Victor. I don't believe it's Snap, but it'll for sure go up again before it goes down. Maybe. All right, guys. Hey, we got 55 seconds left. Again, y'all subscribe, hit the notification bell. We're getting ready to stream these earnings. This earnings call. We're sitting on hold already here. I'm gonna mute the music, but y'all can hear the music right now. It just ended. We're gonna mute this and turn this off now, just because the earnings call is about to start, and I don't want that interfering with the actual earnings call. But yeah, do you think the call can rise? Do you think Apple can rise on the call? Depends on what kind of news they put out. Sometimes, most of the time, the individual earnings drop is more influential than the call itself. But if they report some big news and they hype themselves up, I mean, we could get some good action from it. We just don't know. I have no idea. Uh, so, all right, guys. So we are sitting on hold, waiting for the call to start. Yeah, I think it's all three, Sam. I think it's all three. How many times are they going to say AI? I don't know. You want to do some predictions? How many times will Apple say AI today? I'm going to go with 5. 5 specific times, like 5 specific conversations about AI. Maybe less. Maybe I'm going to go with just 5 total. Apple pump it up though. Apple at 168 short term, so it's moving up a little bit. Again, make sure you hit the live button next to the play button, guys, to make sure you're caught up fully on the stream. Again, we're sitting on hold, waiting for the call to start. It hasn't started yet. Usually they wait about a minute. Apple up though, almost up to 169s. All right, guys. 7 times, maybe. All right, here we go.
The conference is now being recorded.
Sound check. We good?
Good day, and welcome to the Aapl Q2 fiscal year 2023 earnings conference call.
The echo was on their end,
Today's
not mine.
call is being recorded. At this time, for opening remarks and introductions, I would like to turn the call over to Suhasini.
Again, the echo is on their end, not mine.
Please go ahead.
The echo is on their end, not mine.
Thank you. Good afternoon, and thank you for joining us. Speaking first today is Apple CEO Tim Cook, and he'll be followed by CFO Luca Maestri. After that, we'll open the call to questions from analysts. Please note that some of the information you'll hear during our discussion today will consist of forward-looking statements, including, without limitation, those regarding revenue, gross margin, operating expenses, other income and expense, taxes, capital allocation, and future business outlook, including the potential impact of macroeconomic conditions on the company's business and results of operations. These statements involve risks and uncertainties that may cause actual results or trends to differ materially from our forecast. For more information, please refer to the risk factors discussed in Apple's most recently filed annual report on Form 10-K and the Form 8-K filed with the SEC today, along with the associated press release. Apple assumes no obligation to update any forward-looking statements or information which speak as of their respective dates. I'd now like to turn the call over to Tim for introductory remarks.
Thank you, Suhasini. Good afternoon, everyone, and thanks for joining us. Today, we're reporting revenue of $94.8 billion for the March quarter, which was better than our expectations. We set an all-time record for services and a March quarter record for iPhone. We were particularly pleased with the performance we saw in emerging markets and achieved all-time records in Mexico, Indonesia, the Philippines, Saudi Arabia, Turkey, and the UAE, as well as a number of March quarter records, including in Brazil, Malaysia, and India. This result is a testament, first and foremost, to our teams around the world who are engaged every day in the work of bringing new innovations to life. It speaks to the incredible power of Apple products and services to enrich people's lives in indispensable ways. And whether it's in the Design Lab in Cupertino or in one of the brand new retail stores in India, I am constantly inspired by the way our people come together to make a real difference in the world. During the March quarter, we continued to face foreign exchange headwinds, which had an impact of more than 500 basis points, as well as ongoing challenges related to the macroeconomic environment. Revenue was down 3% year over year as a result, while on a constant currency basis, We grew in total and in the vast majority of the markets we track. Despite these challenges, we continue to manage for the long term and to push the limits of what's possible, always on behalf of the customers who depend on our products, whether it's students exploring new frontiers, developers dreaming up their next big idea, or artists taking their creativity to a whole new level. Let me share how these results showed up across our lineup of products and services. Let's start with iPhone, which set a new March quarter record with revenue of $51.3 billion. The iPhone 14 and 14 Plus continue to delight users with their long-lasting battery and advanced camera. And our Pro users continue to rave about the most powerful camera system ever in an iPhone. This March, we were excited to expand emergency SOS via satellite to 6 new countries, bringing this important safety feature to even more users. We now offer this vital service in 12 countries, and I'm grateful for every note I've received from around the world about the life-saving impact of our safety features. Now let's turn to Mac, which recorded $7.2 billion in revenue for the March quarter, in line with our expectations. As we noted during our last call, Mac faced a very difficult compare because of the incredibly successful rollout of our M1 chips throughout the Mac lineup last year. And like our other product lines, Mac is facing some macroeconomic and foreign exchange headwinds as well. That said, the advancements we've made in power-efficient performance continue to amaze our users. Our M2 Mac Mini customers are raving about the pro-level powerhouse packed into an ultra-compact design. And users are marveling at the power and speed at the heart of every M2-powered MacBook Air and MacBook Pro, which allow them to sustain even the most demanding workloads. iPad revenue was $6.7 billion, which was also in line with our expectations. Similar to Mac, iPad revenue performance was impacted by macroeconomic challenges, foreign exchange headwinds, and a difficult compare with last year when we launched the M1-powered iPad Air. iPad's versatility continues to be its greatest strength as we're helping students learn on the same family of devices artists use to create their next masterpiece. Across wearables, home, and accessories, revenue was $8.8 billion. With its exceptional range of game-changing health and safety features, Apple Watch becomes more and more indispensable every day. Apple Watch Ultra is attracting adventurers, athletes, and everyday users with its breakthrough features built for endurance and exploration. And with summer travel season soon heating up, there's no better companion in the air or on the road than AirPods, the best and most popular headphones in the world. Meanwhile, services set an all-time record with $20.9 billion in revenue for the March quarter. We achieved all-time revenue records across App Store, Apple Music, iCloud, and payment services. And now with more than 975 million paid subscriptions, we're reaching even more people with our lineup of services. Apple TV Plus continues to draw praise from customers and reviewers alike. During the past quarter, fans tuned in to incredible new series like Shrinking and The Big Door Prize and got to welcome Ted Lasso back into their homes for a 3rd season. Movies like Tetris are captivating viewers with many more to come, including Martin Scorsese's Killers of the Flower Moon later this year. 3 years since its launch, Apple TV Plus programming has been celebrated across the globe with over 1,450 nominations and more than 350 wins. Recently, we were thrilled to cheer on The Boy, the Mole, the Fox, and the Horse, which won an Academy Award for Best Animated Short Film. The first season of our historic 10-year partnership with Major League Soccer is well underway. With MLS Season Pass, we've created the ultimate destination for soccer fans, offering subscribers the ability to watch every match with no blackouts. And with baseball season in full swing, Apple TV Plus subscribers can watch their favorite teams with the return of Friday Night Baseball. This quarter, we launched Apple Music Classical, a standalone app that gives something special to classical music lovers. Apple Music Classical packs the largest library of classical music on earth into a thoughtful and intuitive design that strikes all the right notes. Whether you're listening with AirPods or HomePod, the premium sound experience of Apple Music Classical will leave you with a feeling of being front row at the symphony just behind the conductor. In March, we also launched Apple Pay Later. Designed with users' privacy and financial health in mind, Apple Pay Later allows users to split purchases into multiple payments with no interest or fees. And last month, we introduced Apple Card savings accounts to give users even more value out of their daily cash Apple Card benefit. At Apple, our customers are at the center of everything we do. Nowhere is that more evident than retail, where our teams are dedicated to sharing the best of Apple with our customers. And we're constantly innovating to deliver exceptional experiences and meet our customers where they are. In the US, we launched Shop with a Specialist over video, a new way for customers to learn about iPhone and find the one that's just right for them. And as I noted earlier, in a milestone for Apple, we just opened our first 2 Apple stores in India, in Mumbai and Delhi. I was there to see it for myself, and I couldn't have been more delighted by the excitement and enthusiasm of the customers, developers, creatives, and team members I got to spend time with. I've had the chance to connect with customers and teams all around the world in recent months. So many people shared with me that they were fans of Apple, not just because of the innovations we create, but because of the values that guide us. And that means a great deal to us. We're constantly striving to make a positive difference in people's lives and be a force for progress. We're investing in education to give students the skills they need to shape the future. We're helping to create pathways of opportunity for communities of color through our Racial Equity and Justice Initiative. And every day, we're building an even more inclusive and diverse Apple rooted in our culture of belonging. To better understand how our work intersects with our values, look no further than what we're doing for the environment. We just celebrated Earth Day in April, and during that month, Apple announced that its global manufacturing partners now support over 13 gigawatts of renewable energy, a nearly 30% increase in just the last year. This translates to 17.4 million metric tons of avoided carbon emissions, the equivalent of removing nearly 3.8 million cars from the road. We're also investing up to an additional $200 million in our Restore Fund, which is designed to support innovative, scalable, nature-based carbon removal projects with the goal of removing 1 million metric tons of carbon every year. These are just the latest steps on our journey toward our 2030 goal to be carbon neutral across our supply chain and life cycle of our devices. At the same time, we're advancing renewable energy across our supply chain. We're also sourcing more recycled materials in our products. Last month, we announced our plans to have all Apple-designed batteries include 100% certified recycled cobalt by 2025. And we remain committed to one day using only recycled and renewable materials in our products. We have a deep sense of mission here at Apple. We believe in the power of innovation to build a better world. We are determined to do our best work on behalf of our customers and to give them the tools that can enrich lives. So we will manage for the long term, just as we always have, with our eyes to the horizon, with limitless creativity, and with a deep belief that we can achieve anything we put our minds to. With that, I'll turn it over to Luca.
Thank you, Tim, and good afternoon, everyone. Revenue for the March quarter was $94.8 billion, down 3% from last year and better than our expectations. Foreign exchange had a negative impact of over 5 percentage points on our results, in line with what we had expected. On a constant currency basis, our revenue grew year over year in total and in the majority of the markets we track. In addition to the records in emerging markets that Tim mentioned, we also set March quarter records in Australia, Canada, Spain, and Switzerland, among others. Products revenue was $73.9 billion, down 5% from last year due to challenging compares on Mac and iPad. iPhone, however, reached a March quarter revenue record thanks to very strong performance in emerging markets from South Asia and India to Latin America and the Middle East. During the quarter, our installed base of active devices continued to grow at a nice pace, thanks to extremely high levels of customer satisfaction and loyalty, and reached an all-time high for all major product categories and geographic segments. Our services set an all-time revenue record of $20.9 billion, up 5% year over year, on top of growing 17% in the March quarter a year ago. We reached an all-time services revenue record in Greater China and March quarter records in Americas, Europe, and rest of Asia Pacific. Company gross margin was 44.3%, up 130 basis points from last quarter, driven by cost savings and favorable mix shift towards services, partially offset by leverage. Products gross margin was 36.7%, decreasing 30 basis points sequentially due to seasonal loss of leverage and mix, partially offset by favorable costs. Services gross margin was 71%, up 20 basis points sequentially. Operating expenses of $13.7 billion were at the low end of the guidance range we provided at the beginning of the quarter and continued to decelerate from the December quarter. We are closely managing our spend but remain focused on long-term growth with continued investment in innovation and product development. Net income was $24.2 billion. Diluted earnings per share were $1.52, unchanged versus last year, and we generated very strong operating cash flow of $28.6 billion. Let me now provide more detail for each of our revenue categories. iPhone revenue set a March quarter record of $51.3 billion, up 2% year over year, despite significant foreign exchange headwinds and a challenging macroeconomic environment. We set March quarter records in several developed and emerging markets, with India, Indonesia, Turkey, and the UAE doubling on a year-over-year basis. Our active installed base of iPhone grew to a new all-time high and was up in all our geographic segments. We're very pleased by the results of the latest survey of U.S. consumers from 451 Research, which measured customer satisfaction at 99% for the iPhone 14 family. Mac revenue was $7.2 billion, down 31% year over year, and in line with our expectations. These results were driven by the challenging macroeconomic environment, coupled with a difficult compare against last year's launch of the completely reimagined M1 MacBook Pros. Despite this, the installed base of active Macs reached an all-time high across all geographic segments, and we continue to see strong upgraded activity to Apple Silicon. Also, the latest survey of U.S. consumers from 451 Research reported customer satisfaction at 96% for Mac. iPad generated $6.7 billion in revenue, down 13% year over year, and in line with our expectations. This performance was due to two key factors: a tough compare against the launch of iPad Air, powered by the M1 chip in the year-ago quarter, and headwinds from the macroeconomic environment. The iPad installed base reached a new all-time high in all geographic segments, thanks to exceptional customer loyalty and a high number of new customers. In fact, over half of the customers who purchased iPads during the quarter were new to the product. Wearables, home, and accessories revenue was $8.8 billion, down 1% year over year, as the category experienced the impact from the macroeconomic environment. However, we did set March quarter records both in the US and in Greater China. We continue to see strength in our watch installed base, which set a new all-time record, thanks to very high customer loyalty and new-to rates. Nearly 2/3 of customers purchasing an Apple Watch during the quarter were new to the product. Moving to services, we reached a new all-time revenue record of $20.9 billion. And in addition to the all-time records Tim mentioned earlier, we set March quarter records for advertising, Apple Care, and video. Despite these records, as we saw in recent quarters, certain services offerings, such as digital advertising and mobile gaming, continue to be affected by the current macroeconomic environment. Stepping back, however, the continued growth in services is the reflection of our ecosystem strength and the positive momentum we're seeing across several key metrics. First, our growing installed base of over 2 billion active devices represents a great foundation for future expansion of our ecosystem. We continue to grow across every major product category and geographic segment, thanks to very high levels of customer loyalty and satisfaction. Second, we saw increased customer engagement with our services during the quarter. Both our transacting accounts and paid accounts grew double digits year-over-year, each setting a new all-time record. Third, paid subscriptions showed strong growth. We now have more than 975 million paid subscriptions across the services on our platform, up 150 million during the last 12 months, and nearly double the number of paid subscriptions we had only 3 years ago. And finally, we continue to improve the breadth and the quality of our current services offerings, from new content on Apple TV+ to great new features available in Apple Pay and Apple Music, which we believe our customers will love. Turning to the enterprise market, we see business customers continuing to invest in the Apple platform to drive higher employee productivity and satisfaction. In Brazil, Boticário Group, the world's largest cosmetics franchisor, originally starting with iPhone to help employees manage operations across a network of retail stores, franchisees, and resellers. As it continues to digitize its business, Boticário has chosen to move all software development in-house and adopted Mac as the standard device for all of their developer teams across the world. In small business, we see an increasing number of customers relying on Apple hardware, software, and services to power their businesses forward, from accepting payments on iPhone to tracking inventory on Mac or iPad to managing employee devices with Apple Business Essentials. As we celebrate National Small Business Week here in the US, we are proud to continue supporting the small business community. Let me now turn to our cash position and capital return program. We ended the quarter with over $166 billion in cash and marketable securities. We repaid $2.3 billion in maturing debt and increased commercial paper by about $300 million, leaving us with total debt of $110 billion. As a result, net cash was $57 billion at the end of the quarter. During the March quarter, we returned over $23 billion to shareholders, including $3.7 billion in dividends and equivalents and $19.1 billion through open market repurchases of 129 million Apple shares. Given the continued confidence we have in our business now and into the future, today our board has authorized an additional $90 billion for share repurchases as we maintain our goal of getting to net cash neutral over time. We're also raising our dividend by 4% to 24 cents a share, and we continue to plan for annual increases in the dividend going forward. As we move ahead into the June quarter, I'd like to review our outlook, which includes the types of forward-looking information that Suhasini referred to at the beginning of the call. We expect our June quarter year-over-year revenue performance to be similar to the March quarter, assuming that the macroeconomic outlook does not worsen from what we are projecting today for the current quarter. Foreign exchange will continue to be a headwind, and we expect a negative year-over-year impact of nearly 4 percentage points. For services, we expect our June quarter year-over-year revenue growth to be similar to the March quarter, while continuing to face macroeconomic headwinds in areas such as digital advertising and mobile gaming. We expect gross margin to be between 44% and 44.5%. We expect OpEx to be between $13.6 and $13.8 billion. We expect OI&E to be around negative $250 million, excluding any potential impact from the mark-to-market of minority investments, and our tax rate to be around 16%. Finally, reflecting the dividend increase I mentioned earlier, today our board of directors has declared a cash dividend of 24 cents per share of common stock, payable on May 18, 2023, to shareholders of record as of May 15, 2023. With that, let's open the call to questions.
Thank you, Luca. We ask that you limit yourself to 2 questions. Operator, may we have the first question, please?
Certainly. We will go ahead and take our first question from Eric Woodring of Morgan Stanley.
Hey, good afternoon, guys. Thank you so much for taking the questions. Tim, maybe if we start with you, if we go back to the December quarter and the shutdowns, the production shutdowns around the time, I think the question a lot of us were asking was, how should we think about the deferral of demand versus destruction of demand? You know, March quarter was quite strong, 2% year-over-year iPhone growth. And so as we sit here in May, you know, how have you seen that customers that weren't able to purchase during the December quarter behave? Meaning, are you seeing that they deferred purchases to March and June? Could they be deferring purchases to later in hopes of buying a new iPhone? Just how should maybe we think about the cadence of that? And then I have a follow-up. Thanks.
Yes. Hi, Eric. It's hard to quantify this, but we do believe we did recapture some amount of sales in the March quarter, as we did see the iPhone performance accelerate relative to the December quarter. The production levels for the whole quarter were where we wanted them to be, so supply was not an issue during Q2.
Okay, perfect. Thank you for that color. And then, Tim, maybe to follow up, you know, it's been 3 or 4 quarters now that you've mentioned emerging markets like India and others, and I imagine having just opened 2 new stores in the country, it's clearly an important market for you. So maybe can you just talk about why you see India as such an important market, and others, how you think about monetization trends in the country, and specifically what you have to do within the country to really ensure that India becomes maybe a more material mix of your business? And that's it for me. Thanks so much.
Yeah, sure. Looking at the business in India, we did set a quarterly record and grew very strong double digits year-over-year. So it was quite a good quarter for us. Taking a step back, India is an incredibly exciting market. It's a major focus for us. I was just there, and the dynamism in the market, the vibrancy is unbelievable. Over time, we've been expanding our operations there to serve more customers, and 3 years ago, we launched the Apple Store online. And then, as you just mentioned, we launched 2 stores just a few weeks ago, and they're off to a great start, one in Mumbai and one in Delhi. We've got a number of channel partners in the country as well that we're partnering with, and we're very happy with how that's going. Overall, I couldn't be more delighted and excited by the enthusiasm I'm seeing for the brand there. There are a lot of people coming into the middle class, and I really feel that India is at a tipping point, and it's great to be there. On other emerging markets, we had a stellar quarter in emerging markets overall, as I'd mentioned, with records set in a number of different places, including Indonesia and Mexico, the Philippines, Saudi Arabia, Turkey, UAE, and then quarterly records in Brazil, India, and Malaysia. And so it was a great quarter for emerging markets in general, despite the headwinds of the currency that Luca mentioned. And so we're putting efforts in a number of these markets and really see, particularly given our low share and the dynamics of the demographics, et cetera, a great opportunity for us in those markets.
Thanks, Eric. Can we have the next
Great. Thank you
question,
so much.
please?
Our next question is from Mike Ng of Goldman Sachs. Please go ahead.
Hey, good afternoon. Thank you very much for the question. It was encouraging to hear about the record installed base across iPhone and across all devices. It's been, I think, double-digit growth over the last few years across the active devices. I was just wondering, is that a good way to think about the installed base growth going forward? And then for the iPhone installed base specifically, I was just wondering if you could provide a little bit of texture around how you think about the growth there, whether regionally or by for smartphones versus switchers. And then I have a quick follow-up.
Yeah, if you look at the install base of active devices now, overall, it's more than 2 billion. As you know, we announced in January that we surpassed that. And this quarter, our Q2, rather, we set new records across each of the geographic segments and each of the major product categories. And that's despite declines in current quarter sales in particular in Mac and iPad. This is a huge asset for us, and it's a testament to the overall customer satisfaction and engagement and loyalty of our customers. And so we view this as a major asset for us. The iPhone base is well over 1 billion active devices. We see this as, upgrade rates and these sorts of things may change quarter to quarter depending upon macroeconomic. But if you back up and look at the install base, we feel great about the size of it and the rate that it's growing.
Great, excellent. And then it was also encouraging to see the number of devices per iPhone user continue to grow. I was just wondering if you could talk about the opportunity to continue to increase that number of Apple devices per iPhone user, and if you have any color around, how the monetization per user may differ from, those, for lack of a better word, super users versus those that may not be as deep into the ecosystem. Thanks.
We try really hard to design our products in such a way that they work seamlessly together. And so whether that's the watch or the Mac, and so that you can start working on one device and finish it on the other. And so there are a good deal of people out there that have multiple Apple devices, and I think this is a testament to the customer satisfaction and loyalty that we've been able to get from the incredible design that our engineering teams do on our products.
Excellent. Thank you, Tim.
Thanks, Michael. Operator, can we have the next question, please?
Our next question is from Shannon Cross of Credit Suisse.
Thank you very much. Thank you for taking my question. Tim, can you talk a bit about AI? It's, obviously more than the topic of the day, it seems like the topic of the year. Just how do you think about it through your products and services? I know you use it in different ways, but also if you can just give us any thoughts you have on generative AI and I don't know where you see it going. Not sure what you want to say on it, but I'm really curious as to your take. Thank you.
Yeah, thanks for the question, Shannon. As you know, we don't comment on product roadmaps. I do think it's very important to be deliberate and thoughtful in how you approach these things. And there's a number of issues that need to be sorted as is being talked about in a number of different places. But the potential is certainly very interesting. And we've obviously made enormous progress integrating AI and machine learning throughout our ecosystem. And we weaved it into products and features for many years, as you probably know. You can see that in things like fall detection and crash detection and ECG. These things are not only great features, they're saving people's lives out there. And so it's absolutely remarkable. And so we view AI as huge, and we'll continue weaving it in our products on a very thoughtful basis.
Okay, thank you. And then can you talk a bit about your shift of manufacturing and diversification of manufacturing footprint? I'm curious, obviously you have a very tight network in China. So how is it going to move to some of these other regions? Are you seeing any impact from, a margin perspective, or just any question or any thoughts you have on what you've seen as you started to shift more and more, outside of China, whether it's growth or it's, actual production? Thank you.
Our supply chain is truly global, and we're investing all over the world. We're investing in the U.S. We're investing in a number of other countries as well, and so we make products everywhere. We'll continue to invest everywhere, and we'll continue to look for ways to optimize the supply chain based on what we learn each and every day and week and so forth, to ensure that we can deliver the best products and services for our customers. If you sort of step back and look at how we've performed over the last 3 years on the supply chain, despite this parade of horribles, if you will, between the pandemic and the chip shortages and macroeconomic kind of factors, the supply chain has been incredibly resilient, and we feel good about what we are and what our plans are.
Thank you.
Thanks, Shannon. Operator, can we have the next question, please?
Our next question is from Wamsi Mohan of Bank of America. Please go ahead.
Yes, thank you. Tim, you had called out on December quarter earnings that Pro models were significantly constrained. Did you see a catch up on the Pro models specifically in the March quarter, and was the mix better than typical? And do you see that mix renormalizing here in the June quarter? And maybe you can comment on the channel inventory levels as well for iPhones, and I will follow up.
Sure. It's hard to quantify, Wamsi, but we do believe we did recapture some amount of sales in the March quarter. And obviously, we had to set the channel at the right levels, and we're very comfortable with the channel inventory that we have on a forward basis. So we do think there was some, but it's difficult to quantify it.
Okay, thanks, Tim. And Tim, as a follow-up, you launched so many services around Apple Pay. Most recently, you mentioned buy now, pay later, high yield savings account. Where do you see the expansion in the payments ecosystem over time? And do you look at the payments ecosystem as a standalone revenue opportunity, or is it more about making the devices even more inseparable from us? Thank you.
What we're trying to do with our payments work is that sort of like we've done on the watch, where we're focused on helping people live a healthier day, on our financial products, we're helping people have a better financial health. And so things like the Apple Card and the fact that it has no fees, like the savings account, which has, as you mentioned, it's very attractive yield. So we're trying to help our users, and these things, but these things have to stand on their own, obviously. But we're very user focused, and so we're listening to them at what things provide them pinch points, and orchestrate our roadmaps around that. Buy now, pay later is another one, that we've just gotten out of the chute. But on the savings account specifically, we are very pleased with the initial response on it. It's been incredible.
Thanks, Tim.
Thanks, Wamsi. Operator, can we have the next question, please?
Our next question is from David Vogt of UBS. Please go ahead.
Great. Thanks for taking my question. Tim, I just wanted to go back to maybe kind of dig into, the restocking of inventory in the channel versus what we're hearing from a demand perspective that appears to be a little bit softer in the March quarter from some of your larger carriers. that exhibited relatively weak upgrade rates. So just want to kind of get a sense for where you're seeing demand signals today, vis-a-vis how you were thinking about it maybe a month ago or even 3 months ago. And is there sort of an acceleration in demand or any sort of signals that you might want to share with us at this point? And then I have a follow-up.
I don't want to go into what we're seeing in Q3 other than the guidance that Luca has given. But for Q2, I think you're probably referencing primarily U.S. carriers. And if you look at our geographic distribution of our performance, it was lower in the Americas, which is primarily, predominantly the United States. And a part of that is, I believe, is macroeconomic. A part is that there were more promotional activity in the year ago quarter. And so I think that's what you're seeing there. Where our results were really stellar during this quarter was really in the emerging markets, and we couldn't be prouder of the results that we had there.
Great, that's helpful. And then just quickly on services, are you seeing anything in terms of consumers' behavior other than sort of the macro that you mentioned and tough comps on, digital advertising and mobile gaming? Are you seeing, users of all the disparate services change and what they're using and how they're using it, and time spent with an Apple service now that we're technically, hopefully fully past COVID with China almost fully reopened? I'm just trying to get a sense for how user or consumer behavior has changed over the last 3 to 6 months. Thanks.
David, it's Luca. As you said, of course, we got the issue around the macroeconomic environment, particularly in advertising and in mobile gaming. But outside of those areas, the behavior of customers continues to be pretty consistent. We are doing particularly well, obviously, in some of the services that we've launched more recently, like payments, where our growth rates are very strong, as the adoption of Apple Pay and Apple Card, and now the new services that Tim mentioned, the adoption continues to increase. Cloud is an area that continues to grow very consistently. Users, want to store more photos and videos and more content on their devices, and so they adopt our cloud services. And in general, the model in the App Store around paid subscriptions continues to grow very strongly. I mentioned we now have more than 975 million paid subscriptions on the platform, and that's almost twice as much what we had only 3 years ago. So obviously the growth in subscriptions is very strong.
Great, thanks, guys.
All right, thanks, David. Operator, can we have the next question, please?
Our next question is from Samik Chatterjee of JP Morgan. Please go ahead.
Hi, thanks for taking my questions. I guess maybe I can follow up on David's question here on services. And in the past, pre-pandemic, the growth rate there was more about sort of mid-teens. The growth rates today where you stand, even if I back out FX impact, is more about low double digits. So one of the questions that we get often from investors and want to get your thoughts on is, even as the installed base growth seems to have accelerated, are these more cyclical drivers that are depressing growth at this point from returning to that level, or do you see more of a rollout on the monetization that you need to do to get back to those growth levels? And have a follow-up, please.
Samik, it's, the areas where we are seeing the impact of the macro environment, as I mentioned, is digital advertising. As you know, obviously, the macro environment is not helping on that front, and mobile gaming, where we've seen a bit of a slowdown, partly due to the macro environment, partly due to the fact that we had very elevated usage during the COVID years. But outside of those areas, we continue to see very healthy growth rates.
And maybe if I can just follow up, and this is more of a macro question. I don't know if Luca, you or Tim want to take this, but obviously the macro is not sort of helpful at this point. But what you're sort of implying in terms of your guide is momentum for your products remains pretty stable. You're actually guiding to a modest uptake XFX for the overall business. I mean, what are you seeing in terms of customer sort of spending trends, and overall, does the consumer sort of continue to deteriorate in terms of spending patterns? And is your sort of momentum here just a function of share gains? How should we think about sort of where the consumer is versus what your products are doing independent of that?
Well, part of it, Samik, is what Tim was talking about. We're having great momentum in emerging markets, and those are markets where our share is low. Gives us a great opportunity to grow over time. It also helps us with the growth of the install base, because you can imagine that in places where our market share is low, we tend to add a lot of switchers, people that are new to the Apple ecosystem. That increases the install base, and over the longer term, it obviously improves our ability to monetize on services as well.
Thank you. Thanks for taking my questions.
Right. Thanks, Samik. Operator, can we have the next question, please?
Our next question is from Amit Daryanani of Evercore.
Yep, I have two as well. I guess first off, on gross margins for the June quarter, they seem to be holding up fairly well, especially given the fact that sales are going down on a sequential basis. So, Luca, I'm wondering if you can just touch on what's driving the strength in gross margin sequentially. It's offsetting, the lack of leverage, if you may. And then, I also noticed that the range of your gross margin guide is 50 basis points. It's typically 100. What does that entail? What does that mean?
So you're right. I mean, we are guiding to a fairly stable level of gross margins at a very high level. We're very happy with the gross margins that we're having this cycle. For the first time in several quarters, foreign exchange, we expect foreign exchange to be flat on a sequential basis at the gross margin level. Unfortunately, it's still a headwind at the revenue level, but at gross margin level, sequentially, we expect foreign exchange not to be a factor. And so the seasonal loss of leverage that you're referring to, we expect to be offset by cost savings. And so that should give us, that level of margins. As you know, you were asking about the 50 basis points. We have guided to 50 basis points of a range before as well. This year in particular, because of the 14th week during the December quarter, we're a bit late in the calendar year, right? And so we have a bit more visibility around margins for the June quarter.
Got it. That's helpful. And then, I guess, Tim, if I just go back to the India discussion a bit, perhaps you could just contrast, what you're seeing in India today versus what you saw in China maybe a decade or so ago. Is that a reasonable ramp to think India would have, or could it be different from the lessons you've seen in China?
I think each country is different and has their own journey, and so I hesitate to compare too much. But what I do see in India is a lot of people entering the middle class, and I'm hopeful that we can convince some number of them to buy an iPhone, and we'll see how that works out. But right now, it's working out well.
Thank you.
Thanks, Amit. Operator, can we have the next question, please?
Our next question is from Krish Sankar of TD Cowen. Please go ahead.
Yeah, hi. Thanks for taking my question. The first question I had is for Tim. Tim, you've primarily been a consumer-centric company, but it seems like the line is blurring with the iPhone, iPad, the hardware products being used for corporate applications. So is there a way to segment how much of your revenues today are coming from enterprise versus consumer? And does the slower corporate IT spend impact your outlook for iPhone, iPad, Mac, etc.? And then I had a follow-up.
Internally, we have our estimates for how much is enterprise versus consumer, and the enterprise business is growing. We have been focusing a lot on BYOD programs, and there's more and more companies that are leaning into those and giving employees the ability to select, which plays to our benefit, I believe, because I think a lot of people want to use a Mac at work or an iPad at work. And so, but we're certainly primarily a consumer company in terms of our revenues, obviously.
Got it, Tim. Thanks for that. And then just as a follow-up, obviously a lot of questions on the India retail opening. I'm just kind of curious. You also mentioned that you hope to convert a lot of, folks into iPhone there. Where do you think the biggest opportunity is? It like primarily a hardware business, like the iPhone, iPad, wearables, etc., or do you think there is a service opportunity in India longer term too? Thank you very much.
I think there's an opportunity across the board, including in services. Obviously, the ARPUs are lower in India for whether you're talking about TV and movie streaming or music. The ARPUs are much lower than other regions. But if you look at it over a long arc of time, I think there's a good opportunity across the board.
Thanks a lot, Tim.
Yeah.
Thanks, Krish. Operator, can we have the next question, please?
Our next question is from Aaron Rakers of Wells Fargo. Please go ahead.
Yeah, thanks for taking the questions. I guess my first question is that I want to go back to kind of the geographical dynamics. I'm curious, as we all think about, the reopening attributes of China, just how you would characterize the shaping of demand you saw through the course of this last quarter, and kind of how you're thinking about the impact of that reopening playing out over the next couple quarters.
If you look at China, our revenue came in at -3 for the quarter year over year, but we actually grew on a constant currency basis. And we also accelerated as compared to the December quarter, which, as you know, had 14 weeks in it and was a -7 on a reported basis. And so we were pleased with how we did and with the acceleration that we saw with the reopening. And we'll see how we do this quarter. But if you look at the top selling smartphones in urban China, based on a survey from Kantar, we have 4 out of the top 5. And I think in all of the third-party data I've seen on the market itself in the smartphone space, we believe we gained share during Q2. So we feel good about it. It also, China has a lot of very good metrics in terms of new buyers. For example, on the Mac, about 6 out of 10 customers are buying the Mac for the first time. Same thing on iPad. If you look over at the Watch, it's more than 3 out of 4 customers are buying the Watch for the first time. And so the buyer metrics, if you will, are very, very good. And our services business hit an all-time record in China during the quarter.
Yeah, very, very helpful, Tim. As a quick follow-up, I want to go back to Amit's question on gross margin. You talked about FX, the lessening impact there. I'm just curious if, when you look at your gross margin, obviously got mixed attributes kind of, potentially continuing to drive that higher. But I'm curious on the current environment, how you would characterize the component pricing dynamics and what you're thinking about in this current quarter's guidance.
Yeah, the environment on the component side is favorable. We've seen component prices decline during the March quarter, and we expect the same during the June quarter.
Thank you.
Thank you, Aaron. Operator, can we have the next question, please?
Our next question is from Sidney Ho of Deutsche Bank. Please go ahead.
Great. Thanks for taking my question. I was hoping we can talk about the linearity of the March quarter and perhaps the first 4.5 weeks of the current quarter. It looks like things are slowing down quite a bit elsewhere, but if my math is right, your fiscal third quarter guidance implied product revenue will be a little bit lower than seasonal average on a sequential basis. Any color would be helpful. Thanks.
Well, we said that we expect our performance during the June quarter at the revenue level to be similar to the one that we just reported for the March quarter. Keep in mind this, we always have differences in the launch timing across our products. And also that, especially over the last few years, we've seen a certain amount of supply disruptions. Sometimes it was COVID related, sometimes it was related to specific component shortages. Just to remind you, in the June quarter a year ago, we had the full quarter impact of the launch for both of the iPhone SE and the iPad Air, which leads to a more difficult compare. So I think it's important to keep those things in mind.
Okay, that's helpful. Maybe as a quick follow-up, you talk about Apple Pay Later. How has the feedback been so far, and how do you expect the adoption of that service over the next few quarters? Thank you.
The feedback for both Apple Pay Later and the savings product have both been really good, and we think both of them help customers live a better or healthier financial life. And so we're very excited about the first days of both of them.
Okay, thank you.
Thank you, Sydney. Operator, can we have the last question, please?
Our next question is from Harsh Kumar of Piper Sandler. Please go ahead.
Yeah, hey guys, thanks for squeezing me in. Tim, you're one of the largest chip companies. You're not a component maker, you actually use your own products, but we almost never hear in any context of you guys being a beneficiary, Apple being a beneficiary for either the CHIP Act money or the R&D tax credit that's being proposed. I was just curious if you're eligible for any of those, and then I've got a follow-up.
I don't see Apple participating in the CHIPS Act directly, but we would be a beneficiary indirectly because some of our partners would hopefully be recipients of it and therefore put in additional capacity. And so on that sort of indirect basis, we would have a benefit.
Understood, and thanks for clarification. Luca, I wanted to clarify your comments about June. When you're saying June performance will be similar to March, I assume on a year-on-year basis, which would be June should be down about 2-something odd %. Is that a fair way? And then my question that I wanted to ask, maybe another one for Tim, was what do you think is the largest opportunity in your services offering? I mean, you're doing a great job. You just set a record, but surely there must be areas where you think you can do better.
Yeah. So to your question around the June performance, yes, on a year-over-year basis, so comparable to the March quarter on a year-over-year basis.
Harsh, I think we can do better on everything, and so I wouldn't just point to one of them. If you look at the number of active devices and the growth of active devices, I think our services are underpenetrated in a number of different ways. And so the way that I look at it is there's opportunity in many of them.
Understood. Thanks, Tim.
Yeah.
All right. Thank you, Harsh. A replay of today's call will be available for 2 weeks on.
Okay, guys, so that is the end of the Apple earnings call today. Before we go, check out one of our sponsors. And again, we are going to do a crypto show today, so do not go anywhere. Literally, as soon as we close this stream, it should immediately reroute you to our crypto stream where we're going to be talking about Pepe, FOMC rate hike, Coinbase, all that good stuff. Coinbase had earnings today as well, so we are going to do a show today. Real quick, a word from our sponsors. Check out Chart Prime. Chart Prime right now has a 45% off sale, so it's less than $35 a month for this. And again, I can't fake this. I'm biased in their favor because they pay me money, but they're a custom trading view signal and alert service. They give you custom indicators. Look at this reversal down signal here, and then huge drops over like an hour. Reversal up signal here, you get a nice little bounce. Reversal up signal here, you get a bounce. And again, I like using them on the hourly chart. So a lot of my swing trades, I use Chart Prime. Check them out. Great way to help support the channel. They got a pretty big sale going on where it's 45% off right now. And if you want to check them out, I'll post this link. Good luck. Again, we're going to go to our crypto show now. I'll see you guys over there. Again, don't go anywhere. And yeah, y'all be good. And again, we're going to go to the crypto show. As soon as we close the stream, if it doesn't route you there, it's youtube.com/beginnercrypto. If it doesn't route you there, Chart Prime's not a scam. The VWAP is not a scam. You know, it's a custom indicator service. It's $35 a month, so it's not $1,000 a month. It gives you custom indicators. It gives you custom reversal signals. And again, I can't fake this. Like people who say it's a scam or whatever. Like, look, I can't fake what I'm showing you. Put a 1 hour chart up. All right. Here's the SPY. All right. So here's a 1 hour chart. I can't fake what I'm showing you. Look, reversal up, you get a bounce over literal days. Reversal down, you get a drop over hours. This one was wrong. This one was right. You get a bounce. If you keep going back here, look, reversal down, drop over like a 4 hour period. Reversal down, drop over like a 4 hour period. I can't fake that. It's not always going to be right. I can't guarantee you're going to make money, but calling it a scam is just trying to be overly critical. It's ridiculous. Check out the link in the description, guys. And again, I'll see you guys over there. Good luck. Y'all be good. And again, Coinbase is out with their numbers. We're going to talk about the Coinbase earnings. Again, as soon as we close this stream, it should immediately bring you to the other stream. If it doesn't, for whatever reason, go to youtube.com/beginnercrypto. I will put that link up right here. Hit the subscribe button. And again, I'll see you guys later.